Good morning. Welcome back to the Retirement Report. I'm Hank Parrott, your host. Joining me today, my good friend and special guest, Dr. Friday with Dr. Friday's tax and financial firm in Brentwood, Tennessee. She is a tax expert for both individuals and small business owners. Friday's been doing my taxes now for over 20 years. She does my payroll taxes, my personal taxes, business, takes care of all those things. In particular, what's that?
I said try to keep you out of trouble.
That's right, which is a good thing. That's what we want. That's why I don't do it. You know, this is one of the things when it comes to taxes. Doing tax planning, or at the very least, you do need to have a working knowledge of the tax system and the tax code and how these things work. But we're not trying to turn you into tax experts or to turn you into where you want to open up your own shop doing taxes. That's not the purpose. The purpose is to understand it enough so that when you're faced with certain decisions and choices and how to improve the tax efficiency, both of your investments as well as when you're taking income in retirement. That's what this is about, is to educate you, inform you, so that you then seek out the qualified help in terms of either the conversations you're going to have with your current tax person, or if they're not like on board for this kind of planning, then of course we can hook you up with Dr. Friday. We can get you her contact information, and of course you can also call my office. That number is 615-376-5325. If you'd like to get a comprehensive financial plan done at no cost to you, that's going to include tax planning, that's going to include applying some of the strategies we're going to be talking about this morning, then just call my office, 615-376-5325. And by the way, if we can bring Friday in. She has volunteered on many occasions to come in, meet, again, no cost, do a consultation together. You get two heads for the price of none.
Exactly. Hey.
How is that?
Sounds like a great deal.
What a deal. So, yeah. All you need to do is call the office. We'll get you information, send you out a checklist of things to bring to your appointment, whether it's talking about taxes, and that's always going to be part of the conversation, by the way. When you're doing comprehensive financial planning, you got to deal with taxes. That's one of the bigger risks that we have, and we certainly want to manage that risk as best we can. But we get into other areas as well. So we're going to look at your income, your expenses, your assets, your liabilities. We're going to factor in for inflation and taxes, rates of return on your money. If there are any liabilities, having a plan together to pay those off. And the whole goal basically is to show you your financial future based on what you're currently doing. Are you going to be able to retire when you want, or if you're already retired, are you going to make sure you don't run out of money and still have the lifestyle and the quality of life that you wish as well? So to help you with all that, all you need to do is call the office, 615-376-5325. As I said, we'll get your information, send you out a packet, a checklist of things to bring to your appointment with me. When you come in to see me, I'll also give you a free copy of my book, 7 Steps to Financial Freedom and Retirement. Okay, and by the way, Chapter 3 is IRA Mastery. And going back to that, we're going to be talking about, again, is tax efficiency. How do I start pulling money out of those accounts in retirement that when I've been pumping it in and just letting it grow tax deferred, it's great. Now we start taking money out. We're going to have to, of course, deal with how to make sure that money lasts, how to still change the way we invest when we're thinking of now needing income as opposed to strictly growth. And of course, the tax part as well. How do we make sure that we have a good plan for that? Well, let's go back again to starting with the basics, as we were talking about the difference between capital gains and ordinary income tax rates. And just for the break, we were sharing with you that 2022 ordinary income tax bracket, the table, if you will. We just talked about the deductions and how those work. And then you have the brackets.
Right, because we were just talking before the break, we were talking about how a lot of people think when they go in, they're in the 10%, they're in the 12, they're in the 22, they're in 24, and they think, I'm paying 24% on every dollar I make. And that's not the way our code is. It's progressive, which basically means what it is. So it means that you are slowly working your way through those tax brackets. So, and there's a 0% ordinary income, and then there's a 10% area, and then there's the 12 and the 22. And as you work your way through, you may be effective tax rate, even though you're in the 22% tax bracket, your effective rate could be 12 or 14% on the overall total income. And I know we get into some examples on that, but that's what's really important to understand, is that when we say a tax bracket, we're not necessarily talking about how much you're going to pay in taxes. It's
Right.
just the overall bracket that you're in when your total income is calculated.
So this, and this is, so understanding, as Dr. Friday was just saying, the difference between the bracket and your actual tax rate.
Right.
So typically, for instance, at the top of the 12% bracket, your actual rate's probably about 9. Okay,
Right.
now we'll explain how that works in the next slide, how taxes owed are calculated. So on this one, we've got an example where, let's see, we've got, I'll let you read through it. Yeah.
So it looks like we have a single individual over the age of 65.
Total annual income of $150,000.
Right. So here in this one, the total income is she's subtracting her standard deduction since she's over 65. We've totaled that as $14,700.
So just to clarify, that's $14,700. The first $14,700 of her income, her taxable income,
is zero.
She pays zero tax on.
So your standard deduction is, in this scenario, would be free money $14,700. So we subtract that from the 150 to get to her taxable income, where we're going to start doing the progressive taxes. So that's $135,300. So as we can see, and in the example here, does it give the total tax on there, Hank, on the slide that she has up? Because it looks like it's just showing the brackets.
Right. This is
there a second
that's
slide?
interesting. Yeah. I don't know if there is or if that's just one of those that advances on its own.
Gotcha.
Emily,
there we go.
There
Look,
we go.
it's
Perfect. That's
perfect.
good. All right.
So then you can see on the slide there, you can see on your TV that we have the 10%, which of course by the time you get to the 10,275, multiply that by 10%, comes out to 1,026, which depending on rounding differences, right? 12% then is the 10,276 through the 41,775, comes out to 37,800, and we keep working our way down. So on $150,000, the tax due is $26,308, which if you took and actually multiplied 24% times 150, you're not going to come to that number. It's actually 17.5% effective tax rate. And it's really important because when you're doing your taxes, and especially when you're doing what Hank does, and he's looking at Social Security, he's looking at conversions, and people say, well, if it goes over this bracket, you need to understand your effective tax rate to see if you're staying within the 22% bracket, if that's your goal, even though you may actually pop into the 24 to stay in the 22.
Well, this is where, when we're looking at an example, would be just a quick tip to help. We can go ahead and get that slide down, Emily. We'll come back to those in a minute. I wanted to take a moment to, as far as the tax tip goes, think in terms of the way that the tax code works. What the purpose of that is showing you, first off, what the different brackets are, the progressive nature, meaning that as you make more, you're bumping up into a bracket, but you're still only paying tax on those lower amounts at the respective brackets they're in. So again, in the example that Dr. Friday just went over with you, you've got someone that's in a 24% tax bracket, but the effective tax rate, what they actually paid overall, was 17.5. Right. Now here's something to understand about the rules as well, is the importance of, Dr. Friday was just talking about, when you go from 12% to 22%, that bracket jump. Now there's some other things that happen in the tax code that's a very important threshold to understand. And so, for instance, if I'm bumping up over that into that 22% bracket, and besides the fact I'm almost doubling my tax rate, right? I've also, this effect on capital gains rates.
Big time.
So we're going to talk more about capital gains, but understanding, as Dr. Friday was just talking about, if you stay in that 10-12% bracket, your capital gains rate is 0. Okay, and we use that when it comes to factoring in a good tax-efficient retirement plan, income plan. So, for instance, I had a gentleman in here recently, and one of the things that we talked about was how he's got a certain amount of gains within his stock portfolio. He's got IRAs, and then we're developing some more non-qualified. And on the IRAs, he has both traditional and Roth. So we can use all of those different income pieces, buckets, if you will, to pull from to provide the income he needs, which would be over $100,000, while keeping him in that lower bracket. And so we're going to get into that through the morning. I'm going to share how we do that and how it might work for you. Maybe these are some things that'll trigger for you as well. First thing we're going to do, though, we're going to take a break. When we come back, we're going to get into the 3 categories of retirement income. So again, you got a better understanding of how these fit together. First a break. Join us here. We'll be right back on the Retirement Report.